What's up? This your girl D. Welcome to PGU Invest Podcast, where we only invest if the price is going up. I'm coming at y'all to give y'all some bangers for this week in the stock market. Last week we went 3 or 4, and of course, my biggest disappointment was mainly the stock that disappoints me most, which is Apple, of course. So, guys, last week, most of the stocks that I charted, I used the ascending triangle. Um, and with that, you have your support levels and your resistance levels. So if a stock breaks below its support, it's very dangerous because it can just really just fall, depending on if it's a large cap stock or, a smaller cap stock. Your large cap stocks, some of them tend to be very volatile. They can change in price differences fast. Like they can really shoot up and increase $30 in a day, or they can really shoot down and decrease $30 in a day. What hurts you most, of course, is the decreases. Um, unless you're playing on the other side, and it's risky either way. The name of the game is to play it smart, find a strategy that works and stick to it. Have excellent risk management. So last week, of course, we had CCI. CCI did exactly what I thought it would do. It broke above my price target, and I think CCI, if you got like a couple of months on a call option, closer to the strike price of 180, you can really, really, really have a chance to make some money on it. Next, I had Apple. Of course, I think with the whole chaos last week of the stock market and then Joe Biden releasing his news on, corporate tax, I think Apple keeps getting overshadowed by bad news. But even though they failed last week, they are on my watch list this week because they have earnings coming up. So Apple is my number one stock that I'm looking at once again this week, and I'm just hoping that it doesn't let me down again like it does all the time. When I play with Apple, I get options. I get a small amount of options because it really disappoints me a lot of days. But Apple is definitely like a cornerstone stock. I would advise anybody to acquire shares, not options, but shares of Apple, and keep it in the corner of your portfolio. So I don't know if y'all can kind of see that board behind me, but if you can, you see that these are like some of my cornerstone stocks that I like. I got Facebook, VFF, Apple, Zomedica, PLTR, and CCIV. But of course, right here I have Apple is highly undervalued after a record fourth quarter in 2020. They have a talks of iCar, talks of an iCar. So they're thinking about creating an autonomous car under their brand. And I got them as a long term foundational hold. And so I really believe in Apple long term. I think, um, Apple has seen back in 2014, it got well over, $500 in stock price. Um, Here last year or so, they had another stock split where their stock price exceeded 500 or so dollars. So I do think that if you buy Apple now, where it's at 134 and you hold it for a couple of years, you very well could have a stock worth more than $500 a share, especially if they come out with the iCar. Um, the spring loaded event for them really, really, really didn't give justice to what everybody thought they was gonna drop. A lot of people thought they were gonna drop um the 16-inch MacBook Pro, which is good news because that means that They're keeping it in the pocket, and it's probably going to be a massive release when it comes out. However, the iPad that they release is really, really, innovative, and it could bring a lot of, Q3 sales, Q2 sales, to the balance sheet. So we're definitely looking for that. So Apple, I'm going to watch this week. You know, they disappoint me all the time, but we're going to see. Another big dog that we got on the list, man, and these call options on Tesla are really, really expensive. But if you catch Tesla on a rip, it will rip. It's very unpredictable. It's not a stock that you can necessarily chart. But however, they do have earnings coming up on the 26th after hours. So I would definitely, watch Apple stock um, come, first thing in the morning. Right now I'm recording this 1:54 in the morning Eastern time. So all the people that's watching Central time, it's almost 1 a.m. Your time's almost 2 a.m. my time. So I would definitely be keeping an eye on Tesla today. Depending on what comes out, as far as their earnings, if they beat their earnings, it doesn't take much to send Tesla flying. It's a very volatile stock, and all of the investors are just looking for any good news just to play call options on this stock. So, my last banger of the week, man, which is, you know, it's one of my trios back here, and that's Facebook. And I have Facebook as a portfolio foundational hold, long term. Guys, sorry if I'm kind of messing up my words and stuff. I'm a little bit sleepy, but I really wanted to get this watch list out for y'all. Um, so it's my favorite stock. If you don't know, Facebook is definitely my favorite stock, and it's a stock that I watch every day, no matter if I'm gonna get call options on it, not, because I'm trying to learn its patterns and you know kind of see what's up with it. So I watch Facebook all the time. I know how Facebook trades. It's a very, very volatile stock. When it goes, you know. So I'm definitely looking at an opportunity to jump in a Facebook play and, get a nice little run off of it. I would not buy too far out of the strike price on Facebook when dealing with call options. You're gonna make your most money, and your safest bet is gonna be buying, in the money on your call options for Facebook and buy in time. Um, but I really believe it's gonna be a chance for Facebook to go. So let's see what day Facebook has earnings this week. So they actually have earnings on the 28th after hours. And their expected earnings per share is a little bit lower than Q4. So we'll see. I'm expecting Facebook to come through for the win. Um, Another one, a bonus one that I'm gonna give you out that's gonna be a stock to watch this week, and they have earnings also, is AMD. So AMD is a very, very good stock. On Robinhood, they have them as a fair value of $101. So I mean, in their eyes, is highly undervalued, just kind of like Facebook. Facebook value is at 335, and they haven't reached that yet. Um, their earnings will be available on Tuesday, the 27th, after hours. So I would definitely watch AMD. On Friday. They had a pretty big price increase of $3.70. So I mean, I think a lot of people are trying to jump in early and gear up for their earnings. Guys, I haven't charted any of these for y'all, but I definitely will be watching these stocks and looking to make a play for them. And I'll be keeping y'all updated on my story on Instagram at PGU Invest, to kind of let you know what I'm thinking about the movement, looking at my charts and just doing my technical analysis on them. Like, at what point do I feel like I should hop in? Some of these I might get in and I might just scalp. So scalp is just getting in for a couple of minutes or a couple of hours um, to get a small price increase, but to make a little money off of it. So I might do the scalp. We'll see. Um, Last week I charted every single play from my Sunday's watch list, and one of them that stuck out to me the most, it did exactly what I wanted it to do, and that was Netflix, right? So I think when I charted Netflix, the stock price was around 546, and I said I was looking for it to break above 550 for an entry, which it broke above 550. It kind of rejected it, and it came back up again to 550, but after that it held. And then I said my resistances were 553 and 555. I expected it to break above 553, of course. 555 was a little bit of a worry zone for me, but I said if this stock breaks above 555, I see it going to the 559 mark. Well, it went to 560, right? So at that point, when I'm giving a play like that, if I'm saying, man, I can't see this going over, or if I see it going to 559, that means that at that point, I'm looking to exit the play. It's very important when trading stocks to follow, your strategy instead of being greedy, right? Because after Netflix hit 560, it rejected it. It rejected the stock price. So of course, I think some bad news may have came out in relation to Netflix because shortly after it hitting that 560 mark, it just fell out of the sky to 504. And so, um I really just am not sure like what happened with Netflix, but okay, so according to here, it's saying Netflix Reeds Hastings exercised 612 million from stock options in 2020. And then it says another headline. It seems Netflix has been dethroned. So I really didn't read much into what made the stock price fall, guys. But it's just because I went into that play strictly focusing on my exit strategy and when I was gonna leave. Risk management when you playing options are very, very risky. Risk management is important. I think my biggest mistake that I've made with stock options is that at first I did not manage my risk. I will get down 60, 75%. And when you get down on an option like that, man, it's hard to come back. A lot of people have a 30% rule of when they want to exit a stock. And I say, yeah, you can have a 30% hold. Um, but sometimes a stock could drop 35% and then it could just really, really come back from that. I think the best thing that you can do is to learn your indicators and learn how to watch a stock. As far as like watching this volume, looking at your MACD, watching your RSI to give you any kind of, signs as to when you should exit. But 40% for sure is a get out. 30% just depends on your strength in technical analysis. If you're not strong at technical analysis, if you're not strong at like knowing how to look at indicators to determine when a stock can bounce back, then I would not suggest, you know, staying in an option past 30%. Guys, another thing is, trading options is not the only way to invest. You have a lot of people that like to swing trade, which they acquire like a nice amount of shares and they just want to get a 30%, increase off of it, or profit off of those shares, and they sell and they move on to the next stock, and they continuously do that. Other people are investing for dividends, they want that residual income off of stocks. A lot of people are just investing long term. They're buying shares and they're just holding them for a long time and letting the value increase. I like options because you can make a lot of money um, with not a lot of investment, but it is very risky. It is very, very addicting. And if you're not careful, it can really, really, really cause you like, you know, I was watching an Instagram video of a guy, he was married, and he said in his first year trading stock options, he lost $40,000. So, I mean, I surely would not tell any of y'all to get into it so deep to where you're losing $40,000 on stock options. It's stock options is easy to learn. I'm gonna try my best to start posting more educational videos for y'all and things that can help y'all out. But it's so many people on YouTube that can, you know, teach you how to trade options. And you know, just do your research. And I'm gonna put some more stuff on the page to help everybody out, man. If you're trying to build generational wealth, if you're trying to buy your freedom, then PGU Invest is the place to be. I want to thank all y'all for tuning in. I'm tired, man. I gotta be to work in a couple hours. Um, but I did want to give y'all those couple stocks, and I'll give you more of a watch list during the weeks of some stocks that I'm gonna watch in addition to. But y'all hold it down, man. We're trying to build a generational wealth. We're trying to buy our freedom. And remember, we only buying if the price is going up. So thank y'all for tuning in.